Well, folks, here we are. More red as tariffs on Canada and Mexico have officially gone into effect. And China, we're going to talk about them in this video. They're doing retaliatory tariffs here, retaliatory, if I can even say that word right today, guys. So we have a lot to cover, from tariffs to the markets, which, guys, every index right now is getting squashed. The Russell's down 2%. S&P, Dow, each down 1.5, and the Nasdaq, oh man, guys, is down 1.2%, and the VIX is up a whopping 10%. This is on top of what we saw yesterday, which yesterday, guys, was not a good day either. Now the VIX is at 25, and we're seeing back-to-back days of destruction. We have a lot to cover in this video. The markets, tariffs, indexes, 5 stocks I'm buying now. So hit the like button, guys. Don't forget to subscribe, as we're on the road to 100,000 subs, and let's dive into it. Oh, cheers, by the way, guys. Almost forgot. Cheers. Take a sip of your coffee. You're going to need it most likely for this video. So again, we are down big time. Now SPY is down to a multi-month low. We've officially taken out the lows from the middle of what is that? January. Yeah, so we're officially red on the year now, guys, and we're approaching 570, which was the low from, I think, October. Yeah, actually no, early November we hit 570 on SPY. And that's where we're at now, pretty much, guys. 570, 575. This is pretty nutty. We've given back all the gains from the last couple of months in just the last week or two, right? You know, this is a classic example of stocks taking the staircase up and the elevator down. I mean, guys, this is what we're talking about here, right? Staircase up, elevator down. In just about a week or two, we've erased all the gains from the last 3 to 4 months. Crazy. At least here on the S&P 500. On QQQ, if I pull this up, this is now actually pushing a 3-4 month low as well. We're now testing the lows from the beginning of November, being about 485, 490. Which is nuts. Again, classic example of stairs up, elevator down here. And let's see, how much is it down from the all-time high? We're down almost 10% now. QQQ's almost in correction territory, and SPY probably not as close to correction territory, but yeah, 7% down for SPY from all-time highs. It's almost there. And don't even get me started on the Russell, guys. The Russell might almost be in a bear market at this point. Yeah, down 17% from the recent high, and the Dow Jones is holding up the best out of all of them, but still down 5 to 6% from the recent high. And again, this is all due to tariffs, right? Let me pull this up right here. Tariffs, like I said, go into effect today. They already went into effect as I'm making this video on Canada and Mexico. You guys can see right here. And Beijing hits back with retaliatory tariffs and other measures after the U.S. imposed an additional 10% duties on China, or tariffs, in other words. And if we come down here a little bit, let's dive into this article so you guys can get a better idea. Maybe you're not too informed on the actual numbers here. So President Trump's 25% tariffs on goods for Mexico and Canada took effect first thing on Tuesday. And Canada responded with plans to impose 25% tariffs on nearly $100 billion of U.S. imports, and Mexico's president said it would also retaliate with a range of moves to be announced Sunday, which, man, I'm actually curious to see how that goes, but we'll worry about that in a couple of days. And the U.S. also introduced an extra 10% tariff on Chinese imports overnight, adding to a levy imposed a month ago. and or a levy, right? Oh my gosh, man, my pronunciation is terrible. It took me a second. I think that's a levy, right? Oh man. Yeah, I'm pretty sure. That's bad. And other existing duties, right? So they're getting an additional 10% tariff, which is nuts. And China swiftly announced retaliatory tariffs on U.S. agricultural goods and other measures against American companies. Beijing also filed a lawsuit with the WTO, the World Trade Organization, and yeah, I mean this is what is pushing stocks down, not just today, but yesterday, and honestly the last week or two at this point. And Tuesday's moves in the Canadian dollar and Mexican peso were relatively modest. However, with some traders benefiting or betting, hefty tariffs will be short-lived. Honestly, I hope they're right there. And economists say American importers and businesses will likely pass along the cost of tariffs. Guess what? Guess to who? Consumers, right? Meaning individuals are likely to see higher prices at grocery stores and car dealerships, which I heard something about cars going up a good chunk in price, depending on where they're getting imported from, obviously. And this is always, it's always been the problem with tariffs, right? Inflation, the inflation risk, prices go up because these prices now get passed on to us, the consumers, right? You know, it's not like China or Mexico, Canada, they're going to eat these costs, right? They're just going to increase their prices and, you know, it's going to get passed on to us, or that's how it usually goes. We'll see how things play out this time, but yeah, I mean, there's a good risk here that inflation, there's a bit of risk that inflation goes up, right? And China, like I said, and Canada retaliate after Trump's tariffs here. Let's see if there's anything new in this article. U.S. tariffs of 25% have come into force against goods from Canada and Mexico, the U.S.'s two biggest trading partners, and the duties will affect more than $918 billion worth of U.S. imports from Canada and Mexico. Let's see. Its finance ministry said, wait a second. Oh, this is more on the China agricultural tariffs on the imports. China said on Tuesday it would impose fresh tariffs on a range of agricultural imports from the U.S. next week. Its finance ministry said additional 15% tariffs would be imposed on chicken, wheat, corn, and cotton, with further 10% tariffs on sorghum, which I have no idea what that even is, to be honest, soybeans, pork, beef, aquatic products, fruits, vegetables, and dairy products, pretty much everything, right? And it also has it has also raised additional complaints against the U.S. with the WTO, which we just talked about here. And let's see, the Canadian Prime Minister Justin Trudeau said Ottawa would respond with immediate 25% tariffs on Canadian dollars, 30 billion Canadian dollar worth of U.S. imports, blah, blah, blah. He said previously that Canada would target U.S. beer, wine, bourbon, home appliances, and Florida orange juice. Wait a second. That's Florida orange juice. That's pretty niche, I guess. I don't know, but I guess, I mean, they're getting their oranges, whatever. We're not going to talk about that. Maybe they're getting them from Canada, whatever. Or wait, I don't know. Forget that. Either way, this is going to be a problem in the short term for the stock market, and the inflation risk is real at this point, guys. It's real, and that's what's causing a lot of investors and traders to freak out. But I don't think it's something that you should sell your portfolio over or do anything irrational over. Guys, relax. Don't freak out. This is normal. Well, maybe not the tariffs part, but the stock market volatility, and I don't think it's going to crash the stock market much further. Yes, we are down almost to correction territory on the S&P, on the NASDAQ. The Russell's almost in a bear market, but I don't think it's going to get a lot worse like some people think. So for that reason, guess what I've been doing, man? I've been buying up the dip on a bunch of different stocks here that I already own. I haven't added any new positions quite yet, but I have been buying stocks that I already own, adding to them, right? And the first one here is actually not a stock, it's an ETF. It's VTI, which I think everybody should own. VTI, VOO, some sort of overall broad-based index fund as some of your portfolio, or maybe your entire portfolio, depending on what type of investor you are. For me, it's not my entire portfolio. It's a decent chunk, but I keep it kind of as the stable part of my portfolio that I add to over time because it is an overall U.S. ETF. It owns every stock in the U.S., small, large, mid-cap, right? So for me, having this as a cornerstone is smart. And whenever it sells off a good chunk, in this case, we're down $20 per share from all-time highs, or about 6-7%. I'm adding whenever it sells off like this. And honestly, every week or two, I'm adding regardless to, keep this as a stable cornerstone piece of my portfolio. So VTI, guys, it's a no-brainer. It's a long-term holding, 5, 10, 15 plus years out. Every time it dips, I'm buying more on the dips, honestly. And I'm buying either way every week or two, no matter where it's at. So VTI, that's number one. I've been buying. Number two is Nvidia, which I'm sure a lot of you probably already know if you've been watching my videos. Nvidia is down a lot, guys, and they're trading at a pretty attractive multiple right now, as the stock's down almost 30% from all-time highs. They're trading at 26 to 28 times forward earnings and 40 times trailing 12-month earnings, or 38, 39. Now that it's dropping, it's probably come down a bit more. But the PE is attractive. The growth of this company is attractive. And I just think it's way beaten up in the short term, man. Now that we're at $112 per share, it actually hit 108 earlier this morning. So I'm going to continuously buy this dip. The closer it gets to 100, I'll buy more. If it goes under 100, guess what? I'm going to buy even more. But to be honest, I don't think it's going to get much lower from where we are now. We kind of predicted this to a T yesterday, guys. I told you I think Nvidia is going to take out the low from early February, which it did, right? And I said we might go down to 100, 105 in the short term. But I don't think it's going to go much lower than that before we get a snapback rally. And it's not really getting a snapback rally yet. I mean, guys, for Pete's sake, the entire market's down. But in the next week or two, I think we will get a sharp rally on the stock, which honestly is opening it up for a short-term play, kind of a swing trade as well, at least in my opinion. Of course, there's a lot of volatility. Anything could happen. Trade at your own risk, guys. But that's what I've been doing there, just simply adding shares. And AMD, I've also been buying AMD, which has been devastated. The stock's now officially under $100 per share, and it's the only stock that I'm down on at this point in my long-term portfolios, guys. I'm down a good chunk on AMD. I'll be honest, man. I am not looking good percentage-wise on AMD. I'm not. I think I'm down like 20, 25% now, but it's not a big position. Let me say that right off the bat. It was never meant to be a big position for me. It's only about a 3 to 5% weighting for me, but I'm down a good chunk on it, right? I'm down a good chunk on it, but I'm continuously buying within reason to keep it in that 3 to 5% range, because over time, I do think AMD will be a $200 plus stock. That's my opinion. I could be wrong. I might be an idiot. I have no idea. But I think ultimately this stock is way beaten up. The max chart looks phenomenal, right? I mean, look at this chart, guys. This is screaming buy the dip, at least on the chart. Obviously, we don't just blindly buy the dip just based on charts, but the fundamentals are good, right? The chart looks good. Once you combine all these things, you're like, wait a second, this looks like a must buy. But I'm not telling you guys what to do, right? I'm just buying this. I'm telling you guys kind of what's going on in my head. And the closer it gets to $80, $70, which I don't even know if it's going to get there. We'll see, but I'll be buying a lot more. So I'm kind of just, to be honest, waiting a bit more on AMD. I bought a bunch in the 120 to 130, 40 range. That's where I bought a good chunk of my position. I bought more recently at 105 to 110. Now I'm like, should I wait till it gets down a little bit more to buy a big bulk position to build my, or to bring my average cost down? That's kind of what I'm thinking. Or I might just buy more here in the mid 90s because, guys, we're disgustingly oversold and we might not be in the mid 90s for much longer before we get a relief rally. I don't know. That's what's going through my head right now. I'm also buying Alphabet, ticker symbol GOOG. This thing is down a lot, pretty much in a bear market now. Yeah, officially with today's down move, we're in a bear market, down 20%. And man, it's too beaten up, I think. I think this one's definitely due for a snapback rally. And for me, guys, I own it as a long-term play. But now I'm considering it for a swing trade. The closer it gets to the mid-low 160s, if it gets to the 150s again, guys, I might be buying it up. I might be buying it up here. So Alphabet, and I've been buying it up. I mean, I've owned this stock for years, but I might buy it up as a swing trade as well. And last but not least here, guys, Sofi. I'm buying more Sofi, which is completely in free fall today, down 8%. And we're officially now taking out the $14 to $13.50 support, which did hold for a couple of months. Now we're falling through it. And you guys probably saw my recent updates on Sofi. I did sell the $16, I think March 21st. I forget the exact date, but I did sell some calls at $16. And this is why I did it, because, we covered it in the video yesterday. I saw potential, more potential downside, right? And selling calls, you don't want to do that when the stock is going crazy, right? Because then you miss out on the potential upside when your shares get called away. You want to sell calls when the stock's flat or you think it might go down in the short term. And that's what I did, right? That's what I did, collected the premium. And now we're in free fall, right? 1245 is where we're at. There's pretty much no shot we hit $16 per share in the next 2 weeks on this stock. I mean, obviously it's possible, but the way things are setting up now, it's not looking ideal for that $16 price to hit. So those calls I sold will most likely expire worthless. So I'll keep the bulk of my position here on Sofi or the shares that I used as collateral. So for me now, I'm like, hey, I might buy some more shares or sell some cash secured puts at maybe the $11 or $10 strike, as that would be where I want to buy more shares, and I might as well collect the premium while I wait for that. We shall see. I'll keep you guys updated, of course, on the Sofi video or on the Sofi updates. But yeah, that's pretty much it for this video, guys. A bit of a longer one, 20 minutes in pretty much. So what do you think? Let me know your thoughts in the comments. Don't forget to hit the like button. Make sure to subscribe here on YouTube. Join the free email list where I'm sending out my top stocks every week. That's linked down below. And if you guys want some free stocks from Moomoo, 30 free stocks to be exact, check out the link also down below. Deposit at least $100. You get 5 stocks. Deposit at least $2,000. You get 25 more stocks, and your uninvested cash now will earn up to 8.1% APY. So guys, check out the link down below or go to stocksurfest.com/Moomoo. And with that being said, cheers. I'll catch you guys in the next video.